Hey everyone, Patrick Jackson here with Mann Mortgage Central Oregon, and today I wanted to talk to you guys a little bit about FHA loans. An FHA loan is a government-backed loan, and it stands for a Federal Housing Administration loan. The pros of doing an FHA loan, one of the major ones is it requires a lower down payment than a lot of different programs. It's only at 3.5%, so that is very helpful for a lot of borrowers that might not have a lot of money saved, for a down payment. A positive about doing an FHA loan is they tend to, have lower credit score requirements, and they're also a little bit just more lenient in overall credit profile, including have a shorter wait period for after bankruptcies and foreclosures and things like that. FHA loans have a higher debt to income ratio that is allowed. That's a very important one for us in the mortgage industry, where that's kind of how we qualify you for what kind of payment you afford. So with an FHA loan, you were allowed to go a little bit higher. So oftentimes that's the difference being able to get a home and qualify for a loan compared to conventional doing an FHA. FHA loans sometimes also have better rates. Since it is a government-backed loan, a lot of times lenders feel a little more comfortable doing those loans. So oftentimes that's passed down, and you might have a little bit lower interest rate doing FHA compared to a conventional loan. And then, another one is that there's no income limitations on FHA loans compared to programs like USDA, which has a maximum income allowed. So there's no minimum or maximum allowed in FHA. So it doesn't matter what you make, you can apply for them. Some of the cons of doing an FHA loan, on conventional loans, you have something called private mortgage insurance. On FHA loans, you have something called mortgage insurance premium. And that's something you would pay a percentage up front, and then you would also pay annually. Unlike a conventional loan that goes away once you get underneath that 80% loan to value, on an FHA loan, if you put down less than 10%, then that will stay for the life of the loan unless you refi out of it. If you put down more than 10%, then that's going to go away after 11 years. And again, unless you refi out of it. Another con is there are loan maximums. So depending on where you're located, you can only go up to a certain amount for the loan. So the bare minimum they allow now in 2022 is $420,680. The maximum for high cost areas like Los Angeles or the Bay Area is all the way up to $970,800. And then in Deschutes County, where you're probably watching this video from, it is $569,250. So somewhere on that scale is what the FHA will allow. And then another negative is there are minimum property standards that tend to be a little bit more strict than a conventional loan, and those are often enforced by an FHA appraiser. So they're going to be when they come and look at the property and do their appraisal, there's things that they'll call out and will be a little more strict on that a conventional appraiser would not do so. And then last one, sometimes an FHA offer when you go to buy a house is viewed as a little bit less, not as good of an offer by the seller. So they would rather have a conventional offer where the person's putting 30% down or whatever, or cash offer, than an FHA loan where they're only putting 3.5% down. So, every borrower and their financial situation is a little different. But for those without great credit or not a lot of money saved for down payment, an FHA loan might be a great fit for them. So if you have any questions about FHA loans or anything at all, please do not hesitate to reach out to one of our Mann Mortgage Central Oregon offices, and we'd be more than happy to help. Thanks a lot, guys, and have a great day. Bye-bye.